In this video, we are going to be talking about investment careers in asset management. Whew. What is going on YouTube? Welcome back to the channel. For those of you that are new here, my name is Afzal Hussain. You can find out a bit more about me through the social media links below, or you can check out my website, which is www.afzalhussain.com. Before we start, I want to say a big thank you to Mogul News, who are kindly sponsoring this video. Mogul News handpicks stories from some of the world's leading newspapers such as the Financial Times, the Telegraph and the Economist, so that you can consume all of the relevant news and information in one place. And you can get a huge discount on all of their packages and subscriptions by clicking on the link in the video description below. Today we're talking about careers in asset management, specifically focusing on investing roles or investment roles or product people. So what is the purpose of an investment role in asset management? Broadly speaking, when money comes into an asset management organization, usually the people that bring that money in are the sales people. And if you're interested in sales roles in asset management, make sure you check out this video. Now, once the salespeople bring in the money or the capital into the asset management organization, they've built the relationship with the client, etc., etc., that money needs to be invested into and across the financial markets. And so how does that happen? What do you do with the money? That's where the investment professionals come in, and that's where they take that money and responsibly invest it across the financial markets. In addition to investing the money across the financial markets, the investment professionals need to make sure that the portfolios and the investments are abiding by the relevant risk measures and preferences of individuals who are investing that money, or corporations or pension schemes who are handing that money to them. So when you come into an asset management firm as a junior employee, so let's say you just graduated, the first role you're going to be, or your title, similar to all other areas, is going to be analyst. And when you're an analyst, you're likely going to be a product person. When you think of the financial markets, you've got various asset classes. So you might have fixed income, you might have equities, you might have quant, you might have alternatives, multi-asset, so on and so forth. Now, you're going to be an analyst in one of these asset classes. So let's say you're an analyst within fixed income. And then there's lots of subsectors within each asset class. So if you're in fixed income, you're going to be in a subsector. So let's say you're in emerging market debt. So you're going to be an analyst for your first 1 or 2 years within emerging market debt, becoming a specialist. So it's very niche. You're going to become a specialist within that area. So you're going to be working on lots of Excel spreadsheets, using a lot of data, creating a lot of PowerPoint presentations, all for the purpose of providing information to clients and internal stakeholders and individuals and different teams within the company and outside the company that are relevant and specific to the emerging market debt space. You are a product person in that area. Why do they call you a product person? It's because the organization will have products that clients can invest in, specifically investing in the emerging market debt space. There's going to be products within this area and you're a specialist in that product. So you're a product person in that area. Now, after you do 2 or 3 years, you're going to be promoted to an associate, and then this is kind of where you choose which path you want to follow. There are 2 key areas that product individuals tend to go into. The first of which is trading, the second of which is investing or portfolio management. Junior portfolio manager is someone who is managing, let's say, the emerging market debt portfolio within the asset management organization. Now, all the investments that portfolio takes, all of the risk that it takes, the junior portfolio manager works closely with the lead portfolio manager or the portfolio manager in order to ensure that portfolio of investments is doing exactly what it says on the tin. So clients who have invested into the emerging market debt portfolio will have certain risk appetites, will have certain areas that they can and can't invest in, will have certain return expectations, and so these are very important. The role of a portfolio manager, whether you're a junior portfolio manager or a senior portfolio manager, broadly speaking, is risk management. You have to make sure the portfolio is following accordingly all the relevant risks and making sure it's on track to achieve the target returns in order to help the clients seek the potential return that they are investing for. If you're a product person and you don't want to do portfolio management and you go into trading, in asset management, trading roles are mostly execution only, and so you'll be executing a lot of the trades that need to go into these portfolios. So a portfolio consists of lots of different trade ideas, lots of different trades over different time horizons, and so as the trader, you'll be responsible for executing large sums of money into the markets, finding the best price, finding the best time to execute those trades so those ideas can go into the portfolio. And then it's the portfolio manager and the junior portfolio manager's role to make sure that portfolio performs well, to make sure it's not exceeding any risk preferences or, you know, causing any red flags, and they just need to manage that portfolio well enough so that portfolio can give the expected returns that the client thinks they're going to get by investing in that portfolio. You also have the research analyst. So if you don't want to be a trader, if you don't want to be a portfolio manager, you can become a research specialist. So someone that specifically works in, you know, say emerging market debt, but they don't do trading, they don't do investing, they do a lot of research, idea generate, and they basically, so let's say you're a credit researcher, you are researching the credits or the debt of various types of companies and seeing which companies make sense to invest in or which companies don't make sense to invest in. So if you don't want to be a trader, you don't want to be a portfolio manager, there is the research position or the economist, whatever it might be, where you aren't doing the investing but you're still idea generating and you're thinking of innovative ways to kind of take advantage of the financial markets. In terms of hierarchy, you start as an analyst, you do a few years there, and analyst translates to product person, then you become a associate, and that's like a senior product person / junior portfolio manager or junior trader. Then you're a VP, and then when you're an MD, you know, you're a fully fledged portfolio manager or a trader who is taking a lot more risk, and you know, your decisions, your responsibility increases because each of your decisions has a lot more weight to it. In terms of what skills make a good product person or an investment professional, obviously you need to be very good at Excel. Most of your time will be spent working on Microsoft Excel, creating various charts, graphics, various, you know, tools, running various data sets and, you know, plowing through lots of data. Making sure you are very good at Excel is a bonus. Oftentimes you use that Excel data and the charts you create into Microsoft PowerPoint, where you're going to be creating a lot of pitch books and PowerPoint presentations that will be used in internal meetings, but more importantly, external meetings that will be going out to clients. So attention to detail, analytical skills, good strengths on Microsoft Office, particularly PowerPoint and Excel, in addition to commercial awareness. These are some of the skills that are very, very important for anyone considering a career in an investment role. This brings me on to the sponsor of this video, Mogul News. Mogul News gives you the best stories from the world's leading publishers in one place, including the FT, The Economist, Bloomberg, The Times, and many others. It's basically the Netflix of news. Their briefings get you up to speed each morning with the most important stories of the day. Perspectives on their app let you see all sides of the story, and collections help you dig deeper on important topics ranging from artificial intelligence in the workplace to the decline of Deutsche Bank. The team behind it have worked at amazing places ranging from Amazon to Bain and Credit Suisse. And you can get a huge discount on all of their packages and subscriptions by clicking on the link in the video description below. One last thing to mention in investment roles is that the hours are longer than salespeople. You're usually getting in earlier, so around 7 a.m, 7:30 a.m, and you're leaving anywhere between 9 p.m, 10 p.m, and even later for the most part, because usually that's just how it is. The product people do a lot longer hours compared to the salespeople. If you enjoyed that video, do give it a thumbs up. Make sure you leave a comment below if you want to suggest any future videos. And if you aren't subscribed to the channel already, make sure you subscribe. And I will see you in the next video. Peace.